I remember I promised you guys I'm gonna make a video where I'm gonna explain to you how you need to do the breakdown. Let's say you look in the market in terms of smart money concept and supply and demand. So I believe I've already made this type of video where I took my entry from here. So if you wanna check that entry, you have to go to my I think my YouTube channel. Let me check the video. The video was here. Just gonna put it. No. Okay. So let me reduce this one a bit down so that we can see the other one. The video has to be this one here, if I'm not mistaken. So this is the video. Can you see, guys, this video where I explain how I took the entry and all this stuff, how I could be able to catch all the movement. I did explain a full case study of this one, because if you check here, I did not use on this video, I did not use any supplier and demand approach, but what I did here was just almost close to smart money, the way people they trade. You see the way I was even able to catch the movement, my sell position until to the downside. So this is what you see, like the way it looked there. You see liquidity. I told you guys this was a liquidity, market run it and come. So today you're gonna see another way of your trading. Then if you want to go watch that video, is going to help you. So this is the way it is, like the way, if you check, let me zoom again so that you can see properly. When you see something like this, what is your eyes telling you? What is there? What do you see? So from looking at this gold, you have to understand how you're going to be able to catch the movement, how you have to take your trade, what you have to look at. All those things, they require you to look at the market. And the first things that I want to show you guys is about the QML. A QML, like most of us, we know what is QML, how you take a QML. Sometimes a QML is market goes to the upside, create the I, then create another higher I. Then market come and break this low, let's say something like this. Maybe you're gonna see market start compressing, let's say get here, sell again, goes to the upside, sell again, maybe get there. Then at the end of the day, see market go there, then market is selling. So when market is selling, let's say from this area, you just need to follow your structure points. You understand what is the structure doing, how do you take the trade, all those kind of stuff. But as long as I have my level here, I have my QML. You see this I. This is the I of QML. Because here I have the I have the low, I have the higher I. The next thing that I'm gonna wait is to see market. I was going to do it to manipulate this area. Then market create a lower low. This is the area where I'm gonna wait for what? For reaction. So a reaction has to happen here. Then if you check in short, QML is a sort of a trap, like where they trap people, because most of the people that they've been buying, let's say people that they are following structure, what they expect is marketers to get from this area. What is this things of throwing? Marketers to drop, get here, then continue to the upside. So we are following what we call structure point. Then market just get here, break this area, and people again, they're gonna start waiting. Let's say those one they says, no, me I'm trading, break, retest, and continuation. And people that they had stop loss here, they kick them. People that have been selling, market return again, kick them, until you're gonna see market is gonna get to the top where there is a QML, then market starts selling. There is another one that we call the QML continuation. So the QML continuation, let's say, is like this. Market just gets somewhere here, create another QML inside, then market drop, market return, and continue. So this one also is what we call a QML continuation. It's happened like every single day. The only thing that we need just to check is to check what is the timing, when is the market mitigate all this area for us to be able to catch the movement. So this video is not going to be the longest video, but it's going to be a video that is going to make you understand of what I'm trying to show you guys from here. Let's say from this area, let me go maybe to let's say I start from H4, and all of you guys knows that this was the level that I sold, because there was that hidden base. I sold from there. Then one must I wait? So I need to see the confirmation. Let's say if I'm not taking the risk entry, then what I'm gonna wait for is gonna be a confirmation to see if market is going to my direction. Then I can go to M15 and try to understand, okay, what is the level? Do you see all this area? What is happening on this zone here? So check what happened on the previous video. What I did explain to you guys was, okay, this was liquidity. This was liquidity that market ran, and market create this manipulation, the one that happened here. All this manipulation, the one that happened here. Then if you open your eyes now, what you're gonna see, you're gonna see something like this. You're gonna see a QML that was being produced. So here we have the high, we have the low, then we have the higher high. So what we wait next, we wait for market to come and create the lower low. Market create a lower low. But you already get a confirmation, and for most of the people, that what they will say, they wait for market to break this low because it's the one that produced this high. But when you follow QML, you need to understand that, okay, here inside there was a QML that was forming, then market has to come back and mitigate the level so that we can do what we can have a sell position. And this is what happened. So now, since I have my level like that, then I'm just gonna take my line, I put it until the other side. This could be a perfect entry for someone who understands how the QML is. You see, this is the QML area. So sorry, this is the liquidity, then plus the QML level. You could come and sell from there, and you go to the downside. So simple, guys. You see, you could sell, market run all this liquidity, then from here you could just come here and sell. And along the way, what you're gonna wait for, you see, this is the area that mitigate this whole zone. Then where is the last point that pushed the market all the way to the upside? The last point was this one, that is the one push. Then here we had what we call the pin engulf. This pin engulf, it's also a signal to tell us that market is going to reverse to a point where we have a supply level. And we know this is the last point that push market where to the downside, this candlestick where they buy to sell. They trap people in this area. Then they created this liquidity. You see, they created this liquidity for them to do what? For them to come and buy. So this liquidity was creating in a valid zone where they wanted to do what? They wanted to sell, you see. Then you can see there is a lot of trade that you could be able to catch from that area. And for people that are in the public group, you guys know that I'm holding a buy from the downside because I could take my buy position from there. QML is happening like every single day. There is a QML, there is this continuation. Let's say market give you something like this, and gold use them most of the time. So we have something like this, market break, go to the upside, let's mitigate the QML and break this low. So when market break the low, then market is gonna see, maybe it's gonna come again back to the downside, to the upside, then continue again down. So all this area here, it become our zone because market manipulated this low, they buy, then when they come back for it. As you can check, even if you could check here, this could be a perfect entry. As long as you understand what you are doing, this could be your perfect entry. If you don't have to look for more calculation of what is happening in the market, you know, to see all those things. And if you check here again, let me show you guys here. What do you see here? If you don't have your eyes, QML is happening like, you know, like every single day. Okay, when you get the entry, let's say you had your entry from here. This is why I took my entry. Then I end up closing on this side. When markets return, I was not looking at it again, so I did not take an entry again, but I wish I could just hold my trade because I saw when market was reversing from there. But check what happened here. What do you see? Is this not a QML continuation from there? That area there. This is a QML continuation. Can you see? This is a QML continuation, but if you don't have the eyes, you're not gonna see it. If you don't use your eyes to see, you're not gonna see it, because here we have the eye, we have the low, we have the eye, market create the higher low. Then if you go, sorry, create a lower low. Then if you go to, let's say, to low time frame, you're gonna see this is a 3D. This is a 3D as a signal for us in supply and demand to do what? To take a trade. And what you look also, you look for, let's say, for your Asian range somewhere here. This is my Asian range started somewhere here. So you can put everything together and just get something proper for you. So this one, you see this area here, this is the QML level. Sorry, this is the Asian range. Then we have inside the Asian range, we have the QML, and most of the people, what they'll do, they'll wait for market to come and trade here, because this is where they have the block. You say, market has to go there to get in my block, but you forgot that market is already created QML. So when market created the QML, then this is gonna be the area where you have to wait for your entry. And if you check properly, all this area was the area where the manipulation was happening. Why? Because this was a level where we have rally, market create a base. If you don't believe me, let me show you that market created the base there. You're gonna see there must be a base on the low time frame. So I know what I'm talking about. You see, rally, base, rally, market come, this is a demand area. Market come here, there's the demand level for the first time, they go inside to mitigate this area. And here we expected market to buy from here, then market did not buy, but market just break the level. We took out the Asian range low, then check market return again back where? At the same time where we have that line. Then from the line, if you push the line a bit up, like say to the tick, you're gonna see this was the level where we had an imbalance. Then market get there, fill that imbalance. So from that imbalance, then market just drop like nobody business. So this is how you have to look at the QML. QML is something that is very simple. It's very simple. And you look at your QML there, you see the QML is there, but what happened here? They manipulate all this low. They manipulate all this low. But if you check the original movement from that low, started from here, because there was a manipulation that happened. Markets break this low. Let me just do something like this. Markets break this low. Then when they come back, here most of the people that they trade continuation, they waited for market to come here so they can take a continuation. But since there was a QML on top, market pushed to the QML to go mitigate the QML, then drop. But check what happened. Market return. And if you are trading, let's say, smart money concept, what you're gonna tell yourself is just that, okay, this is I don't know, mitigation block, whatever. I'm gonna take my entry somewhere here, but check where market went. So if you want precision, this could be your level that you're supposed to be looking for your entry. As long as we have that hidden base, don't expect market to come more to the upside, because this is the base of this manipulation. So they have to come and react to that area. These things happen again this morning. I was looking at it in the morning today. If you check here, it just happened. It happened everywhere. You see, this is the area. If you go to low time frame, this is the area where markets buy, sell. And then what you need to understand is where is my Asian range plus your timing, because this is how I use my supply and demand level. I include the Asian range stuff, and so my Asian range started from here. This is my Asian range. Then you put it to the upside. So you see all this zone, this is my Asian range. I know there is a liquidity that is resting here. So if you want to sell, I have to see market rate above. What is my open price? My open price is here. This is my open price of today. This is my open price of today. Then for me to take a sell position, market has to trade above my open price. And this is what happened. Market trade above my open price. But the only thing I have to check is above my open price, what is there? Is there any liquidity? Is there any significant level that market is going to hold? Because here, if you check, there was a break of this low. This is why we have all this consolidation. All these things is a consolidation. So inside that consolidation, then we have to find what is the level that is going to hold our price. Because if you go to low time frame, let's say M5, then this is what we're gonna see. All that area is a consolidation level. Then this is the last point. So for me to get a perfect entry, I can go maybe to M3 because I use more M3. Do you see on M3 what is there? Do you see this candlestick? And if you come close here, you're gonna see there was these things of imbalance and the way they manipulate it. Check. I did not even go to the low time frame. So if you check this, you put to the tick there, you're gonna see market just respect that level. You put to the tick, all this is manipulation. Nothing respected this area, but they manipulate all that zone inside this consolidation. But check what happened here. Let me show you. You see, guys. So market just get there and start selling. Now here come another story. Let's say you miss the entry because you are not sure of how you need to take the trade from the top. You wanna wait for a confirmation. You tell yourself, oh, this is the break of structure because this is the level that gives me this high, then market break it. So another person, what is gonna tell you, who's trading supply and demand, is gonna tell you, is looking at this area because this area is what we call a QML level. You see QML level. We have the high, we have the low, the higher high, then market create a lower low, then market just push to the upside, mitigate there, then we continue. Remember the open price. This is the open price I told you guys. Then here market come and fill the FEG for people that are trading FEG. Market just get there to come and trade the FEG, but what is your confirmation for that sell on this QML? Again, 3D, 1, 2, 3. You're gonna take your entry from there. I've already explained to you guys about all this story. We manipulate the low because if you check here, this is what we call a QMTR. You see this area here is what we call a QMTR. We have the low. Let me go to M1 so that you guys can see that QMTR properly. You see this guy. This is what we call a QMTR. So we have support left. Then we have the lower low. This is also another sort of QML when they manipulate it. Then we have the support right 1, number 2. We break, a clean break with this then base, the one that is there. That is the level that you have to come and sell again. This could be your entry. This is the place you're supposed to come and sell. If you could not catch this movement or this one, this is also another possibility of you taking the trade. So guys, I'm sharing you with a big secret of this market, how you can make money. The rest just remain to you and to yourself, how you can be able to face all these things. So, and if you check most of the entries, they're happening on the kill zone. This is the kill zone. This is kill zone. 2:30, like I normally take the trade. You see, and yeah, the other one I always take 3:30, somewhere here. You could scalp all these things, guys. You see, so just focus, guys. You're gonna get it right. Don't worry, it's gonna come, guys.